Penny stocks are a highly speculative investment. They're often associated with companies that are small, and sometimes with companies that are in financial trouble. But some investors love them because of the potential for huge returns. So let's talk about the penny stock market. What is it? How does it work? And what are some of the things you need to know before investing in penny stocks? Before we get into the details, let's define a few important terms. The term penny stock refers to shares of small companies that trade at a very low price. Although the term implies that these stocks only cost a penny, they can actually be priced at anything from a fraction of a penny to $5 per share. For example, a company could have 100 shares outstanding and no par value, meaning that each share represents an equal ownership interest in the company. In this case, if one share of the stock sells for $1, the company would have a market capitalization of $100. But if the same share sells for 50 cents, then the market cap would be reduced to 50. This illustrates that market cap and share price are directly related. Now that we've got that out of the way, let's go back to our penny stock example. If the share price were to sell for a penny, then the company would have a market cap of $100. If that sounds like a lot, it's because it is. Companies with a market cap of less than $300 million are considered to be penny stocks. Penny stocks typically trade over the counter or on a bulletin board, which means that they are not subject to the same regulations as companies that are traded on major exchanges like the New York Stock Exchange or NASDAQ. As a result, penny stocks are often much more volatile than other types of investments, and they may be more susceptible to pump and dump schemes. A pump and dump is a type of market manipulation where the price of a stock is artificially inflated and then dumped, resulting in a loss for unsuspecting investors. Another important thing to know about penny stocks is that they are not usually very liquid, which means that it can be difficult to buy or sell them without moving the price. Liquidity refers to how quickly an investment can be sold without affecting its price. When there are not many buyers for a particular stock, it is said to be illiquid. Illiquid investments are risky because if you need to sell your shares quickly, you may have to sell them at a loss. Despite these risks, penny stocks can still be a good investment for experienced traders who know what they are doing. It's important to do your research and due diligence before investing in any penny stock. Due diligence is the process of gathering all of the relevant facts about an investment before making a decision. This includes reviewing the company's financial statements, understanding its business model, and assessing the risks involved. So now that we've covered some of the basics, let's take a look at the benefits and drawbacks of penny stocks. One benefit of penny stocks is that they are highly volatile, which means that there is a potential for high returns. However, this also means that there is a potential for big losses. Another benefit of penny stocks is that they are relatively easy to trade. You can buy and sell them through most online brokerages. However, penny stocks are not suitable for all investors, and it is important to understand the risks involved before investing. If you are considering investing in penny stocks, here are some things to keep in mind. First, make sure you can afford to lose money. Penny stocks are risky investments, and you should only invest money that you can afford to lose. Second, do your research and due diligence. This includes reviewing the company's financial statements, understanding its business model, and assessing the risks involved. Third, be prepared to hold on to your penny stocks for the long term. Don't expect to get rich quick. Finally, be aware of the risks of pump and dump schemes. These are schemes where the price of a stock is artificially inflated and then dumped, resulting in a loss for unsuspecting investors. Hopefully, this video was helpful in explaining what penny stocks are and how they work. If you have any questions, please leave them in the comments below, and I will try to answer them as best I can. Thanks for watching and happy investing.